What's up, everyone? Welcome to my YouTube channel, Best Trading Setup. I'm King Mozart, and welcome to a BTS session. So, quickly, we'll be diving into the chart. I'm a forex trader. I trade ICT concepts. So, I will be sharing my weekly reviews, my trades, and my setups, where I pick my trades, how I pick my trades, and give you free knowledge on how you should look at the market. So I also have a Telegram channel. The link will be in the description. You can join the free Telegram channel so you could one-on-one get to see my trades, get to hear me call out setups, and you do a follow-up on my signals. So it's a free signal and educational channel. So quickly on our charts, right here on our charts, I use three indicators for my charts: Forex market session, New York midnight, and SMA 200. Those are the three indicators I use. Forex midnight, Forex market session actually highlights all the trading session for the day. So as you can see here, this is Sydney, this is New York, this is Sydney, this is Tokyo, this is London, this is New York. Sorry. Sydney, Tokyo, London, New York. New York is green, London is yellow, Tokyo is orange, Sydney is pink. So if you want to also have this on your chart, just come here, search for Forex market session, and right around there you will see trade. It is by Trade Masters. So you can put it on your favorites and put it up on your chart. Next, I have my New York midnight candle. So right around the New York midnight candle, I use it to highlight my New York midnight price. That's one. That's just that. So I use it to highlight my New York midnight price and basically find entries above the New York midnight candle, so above the opening price. So that's a strategy for another time. So I have my SMA 200 also, which I also use. So I use the SMA crossings. I also use it also. Not every time, but in some cases I use it as a means of confluence. Also the New York midnight, I use it as a means of confluence. But generally, I can't just come and pick my trades off the SMA 200. I just use it as confluence. So quickly, as we dive into the chart, and I turn the paint on, which is the forex section. So quickly, I want to talk about a simple strategy. As you can see from the caption of this video, if you've been watching so far, the caption of the video would have just been welcome to my YouTube channel. So but quickly, I want to share some insights on my trades and some reviews of how far we've traded this week. So we have right here Euro USD, and I just want to give you guys a free tip. Previous day high and previous day low, previous week highs and previous week lows. I want you to mark these levels on your chart. If you want to have good daily setups, which are picking your trades day by day, having an overall concept of day trading, you should be able to highlight your previous day highs and lows, because when you have those highs and lows in ICT talks about liquidity. When currently, as you can see, we are in a range, and you can see previous day high and you can see previous day low. Right above these highs are liquidity, buy side liquidity. right below these lows are sell side liquidity. Now, quickly, I want to go to GBP USD right before all this rally up last week, because as let me quickly highlight what I'm saying. So PDH is previous day high, that's the full meaning. PDL is previous day low. So previous day high, previous day low. You can see right here, we swept that high, came to previous day low, swept previous day low, then we kept rallying away. As you can also see here, this is previous day high, previous day low. We swept that high, traded back into the high, then we sold off. Then we came back, did a retest of this swing high and low. Then as you can see, we are here currently. So also highlighting what happened this week. Tuesday's trading day. Quickly, I want to highlight previous day high, previous day low. Now, as you can see, GBP came, we swept the high, sold off to the previous day low. From the previous day low, we went back up. So, with good context around your trading, you should know when we should be sweeping a high or low, or if we are not going to know when a high or low should be swept, just watch your chart, and every day when you wake up and you go to your chart, mark your previous day high, mark your previous day low, and watch the way price will react around that highs and lows. Now, if the price is going to be bullish and we are going to attack previous day high or previous day low, let me put it this way. So right around here, you can see this is previous day high, this is previous day low. We swept it, traded off. This is previous day low of this day. As you can see, we came close to that low, right? We consolidated, then we swept in. That was yesterday. Then we swept deep into that also. So most of the times you should see a quick reaction at that level, at previous day highs or lows. If you get a slower consolidation like this, then there is more likeliness that we are going to keep trading in the direction of the high that was just swept. So if we were going to trade higher, then you will see more like a consolidation right around these highs, or a break and retest, then we keep going higher. So most times you'll be like, okay, how do you enter your trades on previous day highs? How do you know if they are valid? Most times, something like this, I was buying around here. I closed around here because of the news. Initially, from here, I was being bullish. From here, I was being bullish because I wanted this order block right here to hold. As you can see, it was right around the touch of the order block there. I entered my buy and I got stopped out here. But I entered again at previous day's low, traded back up because of the news, few moments to the news. Then I waited for the news to play out. Then we are now here. So also I called a trade also. I called Euro JPY and GBP JPY also. So just mark your charts, previous day high, previous day lows. Once price has swept that high, enter off from From the sweep of that low, that's something like this. From the sweep of that low, the first, if it's a buy, the first bullish candle that closes in the range, that's your entry right there. Then you put your stop loss 20 pips or below the low. It depends on the currency pair you're trading. Then your target should be maybe an imbalance in the range or the immediate high that came for the sweep. So immediate high that came for the sweep should be this. Also, we can be targeting this fair value gap in here. Also, we can be targeting these highs also. So you can have TP1, TP2, TP3. So ideally like that, you can do that. Also this, when we swept previous day's high, right? This bearish candle here could have been your entry, your stop loss right above the high, or 20, 15 pips. Then you can be targeting this low, right? This low can be TP1, this low can be TP2. Then you can now target the rest of the lows. So that's the way I trade previous day high, previous day low concept. I could show you more examples on NZDJPY. So NZDJPY, a beautiful setup, but I didn't pick it actually. This was previous week's low, right? As you can see, this low was made on Tuesday last week. Price came to that zone, swept it. The first bullish candle in the close, that can be your entry. Stop loss below the low. We got stopped out on this. Price came back into the range again. You could decide to pick the trade again into the range. The first candle that closes, stop loss below this low or this low, since this low has taken out this one. So targets can be the immediate high that started the sweep, which is this. Also, you can target these highs. Also, we can target this high. Then finally, that high. So now, as we got to previous week's high, also the same thing, the same setup. The first bearish candle that closes in the range, your entry is right there. Stop loss above the high. All this run up, quick run up, fair value gap in between. You can be feeling that in between. So as you can see, price eventually came down into that region. So you could buy here, sell at the top. Yeah, there are days where surely you will have a stop hunt where you get stopped out. If you get it back into the range, you can pick your trade again. So that's just my short tip on previous day high, previous day low, previous week high, previous week low. So hope you find it impactful. As you can see currently, this is previous day high. We've broken it, we've tapped it, and we're already being bullish. So right around here, after the tap on that high and this break, we can wait for price to come to this fair value gap. And we can plan to buy. I like my fair value gap to be filled halfway. Stop loss at this low. Targeting the same previous week high or this high that broke previous week high. So this is just a 1 to 2 risk reward ratio. So I think also we can go to this CHF JPY. Okay, I think it's card JPY. Yeah, it's card JPY. Okay, card JPY. You can see previous week's low. This week, Monday, as markets open, we traded into the low, then we've traded away. So, and right here, I can change this to relative equal lows. I don't think price will be coming back to this region, so it will be previous week's low for next week. So let me just put it down. We have this fair value gap here. Okay, so quickly, going to DXY, what I expect from DXY. So in DXY, also the same concept worked wonderful in DXY. Right here was last 2 weeks low, which is February 29th. Previous week's low, PWL. And right around here, on Friday last week, we swept that low. And as you can see, after sweeping the low, we've been trading higher. So this week I expected price to actually go higher. I expected DXY to go higher actually. So you can see after we swept the low, then you have this fair value gap. Price came to tap into that fair value gap, and we've been bullish since then. So, and also in ICT concept, we also have what we call internal to external range liquidity, where price moves to target external range liquidity, then comes in to sweep internal range liquidity for external range liquidity. So things like that, or external range liquidity to internal range imbalance, then we go for an external range liquidity. So something like this: external range liquidity, internal range imbalance, then we went all the way for an external range liquidity, which were this previous week high and relative equal highs. So as you can see, price has swept that high and we've traded lower. Right around then was when GBP USD was also sweeping its own low, its own previous day low. So you can see, with a lot of confluence, you can get some good setup with DXY. And also, if you do your analysis very well on DXY, then it should correlate well with the other dollar pairs. So as you can see, we've created a fair value gap. And I want price. Probably this is okay for me. This is okay for me because I don't want to see price. We should have something like 150 ticks for a stop loss. We shouldn't see price come above this region. If price comes above this region, then surely we are going to go bullish. So we should see DXY go for its previous day's low, or come to this area of imbalance, which is here, right here, that fair value gap. Right? So we should see price come in and get it filled. So roughly around 400 ticks. Or let's just say 450 ticks. Right? So a 1 to 3 setup currently. So if I want to see DXY to go lower, then I should be expecting Euro USD also to go lower. So as you can see, we started our day, right? we've tapped into this imbalance here, right? So we could see price sweep this low quickly, then we pick our buy on this 5 minute order block, and as you can see also, it's slapping with this also. We swept this low, we call it a bullish breaker, so this should be a 5 minute bullish breaker, so they are lapping in together. So we could have something like this, that candle's high and low, and we have this 5 minute order block in between. We can expect price to come lower, have a stop loss of 20 pips, right? Because we have to give the market an opportunity to breathe, and 60 pips will be our target. So we'll be targeting to go above previous day's high. So all these trades will be sent to the Telegram group. Please join the Telegram group. You get to see setups and get to have a direct opportunity to get free education on forex trading, my concept and views about the market, and also concepts I also use to trade the market. So also this is in this fair value gap. So we could have this fair value gap right here. Then we have price has swept this low. This is a bullish breaker. A bullish breaker. This is also a fair value gap. So we can see price come into that bullish breaker. One moment. Yeah. So roughly around here. Then we can set a 20 pip stop loss, targeting, let's say 60 pips also. So 60 pips will be targeting all the way back to previous week high. So also around here also, where we are currently on this market, we can also observe that an SMT divergence is also happening. The reason why is because in DXY we already have price reach this high. This high was formed. Now anytime GBP is making a low, it means DXY is making a high. So this high was made 2nd of December. You can see the date right there, Monday 2nd of December. Now in Euro USD, that low was made also Monday 2nd of December, and as you can see, price hasn't come to that low. Also in GBP USD, price is way far from that low. Can you see it? So it means accumulation of price. It means as DXY is making a higher high, then GBP is making a failure swing low. That is an SMT divergence. So we should get higher prices because of that SMT divergence. So this is what we'll be looking out for. Also, AUD USD unemployment rate came out yesterday. It came out came out today. It came out positive. So we have this fair value gap right here, right? we can expect price to get it filled halfway. So, and as you can see, all these 5-minute down close candles, that's a bullish order block right there. If I come to my 15-minute, that's another block. As you can see, it's another block. So we wait for price to come into this region, tap this order block, stop loss also 20 pips. So we are trying to get an RR of 1 to 3 or more, basically 1 to 3. Also NZD USD, we've gotten to previous day high, we've tapped it already, but we have this fair value gap right here, right? We can have price come back into this fair value gap zone, 20 pips stop loss, and we'll be targeting 60 pips also. So all these trades will be sent to the Telegram group. You can do a follow up so we see the setups. When price comes here, we are willing to pick a buy for that price to see higher prices. Also, USD JPY, we are approaching previous days high. Euro JPY also. GBP JPY would have traded into its previous days high, yeah. So GBP JPY has traded into its previous days high. If we get a 5-minute close candle under this region, trust me, I'll be selling it all the way down, or selling it down to this fair value gap, this imbalance right here that was made. So I'll be doing that if we get price trading it back into that region. AUD JPY already smashed previous week's high already. Sorry, it's already smashed previous week's high, and right around that high we also have relative equal highs also. So once we get this candlestick to close, maybe right here you can get an opportunity to see me pick a trade live on our first video. So right around here, once we get this 5-minute close candle, we'll pick our trade. So I'm just waiting for price. Yeah, we get that close. Stop loss 25 pips, take profit 75 pips. Right there. So we'll be trading back into this imbalance right there. AUDJPY. So 25 pips stop loss. So yeah, we have the trade executed already. Let's put our TP right here, 75 pips. Let's just say we make $100 from this trade. So currently I want to send the signal to the group now. So if you give me a moment, I want to send the signal to the group. Just so fortunate that we get to trade live on our first video. That's so funny. We get to trade live on our first video. So I'll be calling out the trade. NZDJPY. So not NZD, it's AUD. Yeah, AUDJPY. So the group link will be on the description below. You can join in. This is the way I pick my trades. You can join in, get to pick the trade, get to see me execute my trades, and you get to see the trades of the month also. So you get to know if for the month we are profitable or we are not profitable for that month. So you get to know we have a 25 pip stop loss. Our take profit one will be would be 50 pips, right around here. Right around there is our take profit one, which is 7.214. Then our take profit 3 is going to be 75 pips. $97.1. Yeah. Oh, not a sell setup, sorry. It's sell now. Yeah. So fortunately in our first live video, we get to pick a trade live with everyone. You get to see the way we enter. Also GBP JPY, if we get these candles close in this zone, I will also get to send a sell signal to the group also. So, and we can ride the wave from right here all the way down to this low, maybe 70 or 75 pips. Yeah, So that's just that. That's the way I pick my trades. Mark your previous day high, mark your previous day low. If the trades play out fine. You should also have your overall bias and setup also. So also all these um dollar trades setups, I will send them to the group also. So um in the coming videos we get to talk about other things, fair value gaps, liquidity sweep, New York midnight candle, moving average. So I get to talk about a lot of topics. Follow my YouTube channel. I will send setups. I will talk about weekly reviews on my trades, my executions, what made me pick my trades, and also you get to follow up the trades also on my free YouTube channel, also on my free Telegram channel. So thank you very much, guys. I love you all, and I hope you have a good trading week this week and you end up being profitable. Thank you. Peace out. King Mozart out.